Welcome back, everybody, to another episode of the Expert Trader podcast series. I got my boy Aman in the house today. He's going to be joining us for this podcast. He's a 22-year-old Forex trader and entrepreneur. He's going to be walking us through how he looks at the charts, how he looks at markets, and maybe some tips and tricks on how you guys can succeed. Aman, welcome to the show.
Hey, I really appreciate you bringing me onto the Chart Arctics podcast. It's been crazy. I know me and Roy have been going back and forth, but we're finally making it happen.
Yep.
Blessing to be on here. So yeah, let's get started.
Sure, long overdue. So the way that we typically start the podcast, Aman, is if you can give a background on yourself to the people who might not know you.
Okay. All right. So guys, I'm a 22-year-old Forex trader from Atlanta, Georgia. And basically, I started trading when I was 17. I was in high school. I was in 11th grade. Basically, life was pretty normal. I was just a high school kid, this and that. And I was introduced to somebody from an MLM. Basically, he was a classmate of mine, and basically, like all our classmates, he was like signing all of us up into the MLM. And I was like, "Yo, what is this?" Like, he was just like, "Oh, you can make hundreds of $1,000s from your phone, this and that. You can bring people on, and you can make money like that, this and that." And I was just like, "Oh, I'll give it a shot." And basically, I was in that MLM for like literally like 2 months. Like, I gave it a shot, this and that. I kind of didn't really learn anything in that MLM, but I got introduced to the concept of Forex and crypto. I was like, oh, wow, like foreign exchange, like, well, we could trade currencies against each other and, we could literally make money on our phone. So I kind of started diving more deep into it, this and that. I was able to find a mentor basically in my area who became very successful also at a young age. He was also the same age, but he had also become a six-figure trader already. And I was like 17. I was like, wow, like this guy, he's making hundreds of thousands of dollars per year. Like, how is this possible? So I kind of had him mentor me, this and that. I learned a few things from him, and then I bought not a lot of courses, this and that. Probably like 5, 6 courses, just went through that, this and that. But the biggest thing was I was going through a lot of courses and it would be different strategies. So I was just like, wow, so what about this? Like, why is this person teaching this, but not this and that? It was always a confusion. And then finally, I came to the point where I need to collect everything together and be able to cultivate my own strategy. So in 2018, that was my 1 year into trading. I was really able to cultivate my own strategy. And basically, I was just like, okay, so this is how we're going to go about it. These are the confluences, this and that in the market. I was trading a lot of demo accounts in 2017. We were still, trial and error. As I always say to my students as well, trial and error is like the biggest way to learn this. Like, and I was taking trades on my demo account, this and that, blew a lot of money. I started depositing real live capital. I deposited my first account with like $500, I believe. I blew it in like less than 20 minutes. Yeah. So, it's been crazy. And then after that, just keep continuing to find a proper strategy. And 2018 was probably the end of 2018 was the year that, I was like, okay, I think I could really do this. Like, this kind of working. Like, I was able to flip $2,000 to roughly 15 grand. And I was like, wow. And then I withdrew like 8,000 out of that. And I was like, wow, this is actually real money. Like, this is actually possible. And then in 2019, I started going harder, this and that. This was my second year into trading. Just kept pushing, depositing more money in my accounts. I used to work a job, so whatever I used to make from there, I used to just deposit straight into the account. Like, for like a whole year, I kind of went ghost from everybody. Like, I was just saving money, this and that. Just continuing to just deposit in my
But
account.
hold on. I don't mean to interrupt, but I don't think I ever asked you, what did you work at?
I used to work at a tutoring place.
Okay. So
Yeah,
what did you tutor for?
it was like math. I was always good at math. So, I used to work at a tutoring place, and basically, yeah, I used to work there probably like 5 hours a day, like every day. And like it was usually from 2 p.m. to 7 p.m. And it was usually like, elementary school students, this and that would come to that tutoring place. So yeah, I was just like, teaching math, this and that. Yeah, I was pretty good at math my whole life. And that's probably one of my subjects. So yeah.
Okay. So it's 2019. It's your second year trading. Are you trading and working this job? Like you're trying to balance
Yep,
both?
yep. I was doing both. So mostly everybody predominantly knows me as a London session trader. So I was trading at night. I would trade London session from roughly 3 a.m. to 6 a.m. and then go to sleep around 7. wake up at 1 and then, go about my job, this and that.
Okay. So then walk me through it. So 2017 demo, 2018, you got your strategy. 2019, you're getting the hang of trading. When did things really flip for you?
So I would say mid 2019 was the year that things really took off for me. I actually started going and just trading one pair. What I used to do is I was one of those traders that had an MT4 where you had to scroll down because there's different pairs being traded at the same time. Like I remember trying to trade like JPY, like EJ, and I remember what I would do is I would just sell like all the JPYs at the same time because I was like, oh, okay, one JPY is moving this way, this and that. I was able to flip a few accounts like that, but then I learned the hard way that this is not how it moves.
Yeah. So real quick, just from that, because I feel like there's a lot of gems here. So I feel like at some point in everybody's trading journey, you kind of tend to do that. So if you see a move on like GJ, you'll be like, all right, I'm going to short GU and GA too, because they should all be moving the same. What did you learn from that experience? Is there any sort of like validity to that strategy, or is it just something to stay away from?
I would say that's something to stay away from because what happens is, as people know, there's fundamentals, right? And certain pairs that you're trading against might have certain fundamentals which you might not know of. And basically, let's say if you're trading GBP USD and GBP AUD. Now, if you have like an AUD bank rate coming out, then the whole direction of GBPs going down might not actually work, because if the AUD bank rate is bearish, then obviously GA will go up.
Okay. So the fundamentals of the different cross currency, that's the one that's going to affect the pair. Very important lesson. So walk me through again the point of success when you start to see some like real success in your strategy. You were trading all the different pairs. Did you eventually hone in on a few?
Yeah. So what I honed in on mainly was Euro USD, GBP USD, and GBP JPY. Those were the three go-to pairs. And I studied those, I back tested those. Those pairs I had seen in London session, they do correlate very closely, and those pairs they do gain volume. Like right now in 2023, the volume is a little bit weird, but for the past 3 years, from 2017, 18, 19, and 24 years, the volume was pretty consistent on those pairs. And obviously it's because of all the economy stuff that we have going on. But volume was pretty consistent on Euro USD, GBP USD, and GBP JPY. So I kind of used to just scalp those three pairs after London Open. Every day I used to just do that. And my point of success was probably, I would say, is I had an account. I finally saved up enough money. I had an account that it was $10,000. I was able to flip it to roughly 40 grand. And then I withdrew some money off of that. And then that was the point where I realized that this is going to be my life. Like, yo, I just made $40,000. I'd be like, yo, I could really do this. Like, and then I quit my job after that. I was just like, okay, so I have enough saved up to take care of my bills and my expenses, and then I could rely on this. So in my head, like the way I think about Forex and making money every day is I really stick to risk management. So I stick to it like every day. If I can make an X amount of money, I would have to stay away from that job. So that's how I kind of did it. And obviously, some days, you make more money. Some days you might not make anything.
So, I mean, I'm one of the people that I quit my job to trade Forex full time, and everybody makes it seem so glorious from the other side until you're like stressing to make money being a full-time trader. So what was your experience like finally going full time, and did you feel that pressure? Did it affect your performance at all?
Yes, it actually did, because the first 2 weeks, I actually ended up not making any money because then I had the pressure. I was just, yo, like this, I need this money. Like, yo, I don't have a job anymore. What am I gonna do? I'm gonna be broke. So so I had that, and then I started overcoming that. I was just like, okay, I can't think about Forex like this, because the minute you say that, oh, I want to make $5,000, that's gonna be like, oh, the market's not gonna give it to you. So then I started taking it really slow. I was just like, okay, so let me tone down the risk, and let me make sure that even if I'm only making like $300 a day or $250 a day, I should be okay. And not $1,000 a day.
So were you scalping or swing trading? How were you trading at that time?
I've mainly scalped. That's my main thing. 90% of my trades in my whole career were scalps, and by scalps I mean like scalp and intraday. So like 50 pip moves, 40 to 50 pip moves. That's it. And usually what I trade with is I trade with a tight stop loss. So most of my stop losses are 10 to 15 pips on every trade. So I like getting that 1 to 4, 1 to 5 risk reward. I don't actually go for anything crazy like 1 to 100, anything like that, because I feel like, just catching the 1 to 4, 1 to 5 moves every day consistently will add up at the end of the day.
Do you consistently hit the 1 to 4, 1 to 5, or do you ever take partials? Do you ever close the trades early, or what? How does that work?
So I mainly aim for the 1 to 4 currently at the current market state. But due to certain things in the economy, this and that, and certain consolidations on certain pairs, sometimes 1 to 3, I like closing 50% and then having like the rest run to like 1 to 4, 1 to 5. 1 to 3 is like the secure zone at this point. But during COVID, for example, in 2020, I was getting those big moves every day. So holding 1 to 5 every day was pretty easy. And then, so there would be some days I would lose, but I would only lose 1% because taking a 1 to 5 trade makes me 5%.
So how do you think about risk management with this, with those types of numbers? So 1 to 4, 1 to 5, phenomenal. How do you think about risk management in that sense? Do you use a percentage of the account overall? Do you have a maximum weekly limit? How do you think about risk management?
So basically, like what I try to do is if I can make 15% a week, 10 to 15% a week, that's good enough. And that's something that, I really aim for every week. And that's basically 3 1 to 5 setups.
I mean, that's still phenomenal. 15% a week is incredible.
Yep.
Incredible performance.
Yeah.
So let's kind of shift over. Have you changed your strategy around in the past 3 or 4 years? Like since you started becoming successful, have you used the same scalping strategy, or have you bounced around to different methods?
So I would say 75% of the strategy has been the same. There is a few other things that I picked up on, and that's basically just like, real experience in the markets. Like when you start to see certain things in the market happen over and over again, you start to pick up on it. So I wasn't really using candle flips before, but now I use the 4 hour candle flips and the 1 hour candle flips to really get precision entries rather than just taking the breakout.
What do you mean candle flip?
So by candle flips, what I mean is when the 4 hour or the 1 hour candle, when it begins, it usually makes the low or the high. So sometimes in a bullish market, you will see that the candle comes down and it makes the bottom wick. And then as soon as it flips, it will shoot back up and it will go in the same direction as the volume. So usually what I like to do now is I like to hop in on that flip. It gives me a more precise entry rather than hopping in on the top, basically after the closure. I know it's a little bit aggressive entry, but obviously if you have 4 other confluences, you're pretty much good to go on it.
No, it makes a ton of sense. So I mean, let's talk about some psychology of scalping, because I know it does take a little bit of a different skill set than intraday trading or something else. What challenges do you see with scalping?
With scalping, what challenges that I see is basically like when I first started, it's just like the numbers, they actually move like really quick because of the fact that your take profit is short, pretty like kind of short, because it's not like 100 pip take profit, but then your stop loss is a little bit short too. So when I was first getting into it, like trades would go kind of in drawdown like 4 or 5 pips, and sometimes I would be on the edge of my seat for a little bit. But then I learned to just trust my own strategy, that I know that if I put my stop loss at this area, I know if it hits this area, I'm most likely wrong on the direction.
You also think like when you're scalping, you're also kind of using bigger lot sizes. So do you feel
Yes.
like the bigger kind of leverage is causing a lot of those emotions?
Yeah, because let's say for example, like if I'm scalping currently on a $200,000 account, and if I'm risking 1% on 10 pips, I'm literally I have a 20 lot running basically. So it's crazy. Like if I lose that trade, I lose $2,000. Theoretically, it's only 1%, but that monetary value sometimes it gets to your head.
Yeah, for sure. Okay, so if those are the challenges with scalping, then what are kind of like some pros to scalping versus, let's say, intraday or swing trading?
So pros to scalping is I'm one of those people that like to make my money within like 1 or 2 hours and be out of the market. Then I can just go about my day. So, that's the thing. Rather than swing trading, like, you have to hold for a few days. And a lot of times what I would see is with swing traders, they would be deep in profits, like 40, 50 pips. And then they would be holding till the next session and it will be a reversal and boom, they hit break even. So instead of that, like I more so went with scalping because I would be like, okay, if I'm up a certain percentage, then we should be good.
I'll be honest, like for me, I felt like it was easy at like the 5-figure range to be more of a swing trader and intraday trader. But then the larger
Yeah.
the account size, kind of getting into the 6-figure range, I started to realize that I like scalping a lot more just because I don't like
Mhm.
to have positions open for that long. Because
Yeah.
the longer you're in a
Yeah.
position, the more risk you're taking on. So there's always that challenge. So then how do you approach your trading? Are you like, would you consider yourself purely a technical trader? Do you use fundamentals and sentiment in your analysis, or how do you think about it?
So I mostly go with technical. I'm mostly a technical trader, and by that, what I mean is I still do look at Forex Factory when there's certain news events coming on, this and that. That kind of gives me the keys where volatility will hit and my trades will push in the right direction. What I believe about fundamentals is basically like if your technicals are correct, to be honest, fundamentals are just a catalyst, and it'll push the trade in your direction. Now, if your technicals are wrong, then that's where you screw up.
Yeah, I definitely agree. I feel like technicals is definitely like the backbone of everything that we do as a trader, but fundamentals will just be able to kind of add some color to your existing strategy. That's pretty cool.
Yeah.
Um, so when you're trading in front of your team, because I know that
Mhm.
you do you do live trading or do you?
Yes.
Okay.
So I do live trading for a London session, and I trade GBP JPY.
So talk to me a little bit. Actually, let's do some history real quick. Talk to me about when you started Elite Capital. What was the idea behind it, and kind of what has it turned into now?
So when I started Elite Capital at the beginning of 2020, I think it was January of 2020. So now it's been 3 years since I've started that company, and basically me and my partner, his name is Jesus. We started this company. Basically, we wanted to just do mentorships. Like we didn't actually think that we were going to send signals, stuff like that. We had a lot of people from the MLM that we used to be in hit us up, and they were just like, "Oh, you guys are actually becoming successful. Like, we want to learn from you guys." Everybody was just like, we want to learn from you guys, this and that. And I was just like, okay, like, I'm going to have a structure where, start a company and then we do calls together, because I was just like, if I do calls with each person like this, then my whole day will be full. So then me and my partner, we started the community. Basically, it was just a full just mentorship in the beginning, where people can just come and join. We created a little course, this and that, like we drafted it up, and we pushed it out, and basically people were joining us, this and that, from the MLM. It's funny because that certain MLM, they were threatening to shut us down. But anyways, yeah, so people started joining, this and that, and then they started wanting some more value. They were just like, okay, so you guys are teaching us this and how to trade, but we want to see, like, you do live trading, this and that. Like, we want to see like signals, we want to see stuff like that. And I was just like, okay, so we're gonna have to change the dynamic of that. So then we kind of rebranded into a different company, and basically created our Discord group, where we have signals, the course, and the mentorship. And basically, I do provide one-on-one mentorship with my students. And we have daily Outlook Zooms as well, where we just review the market. Everybody can come on there. It's like a class session, and people can ask questions and everything. And then we have our live trading Zooms in the London session. And also, we have live trading in New York.
All right, so full schedule. When you're
Yep.
trading with the group, do you find that it impacts your decision making? Do you find like that it impacts your trading at all, or are you pretty dead set on your strategy?
So I'm pretty dead set on my strategy. I actually enjoy trading with the group, because sometimes trading, it's just you and the computer. Sometimes, it kind of gets boring. So, I find the Zooms very fun. Like, I get to show my screen. Like, we're talking about everything from life to cars to trading to, everything. As we're talking, we're taking trades, this and that. So I really enjoy doing that. And that's why, I've been continuously doing it.
Yeah, I'm a huge proponent of the trading community. I know a lot of people
Yep.
kind of see it as like some people who are beginners kind of use the community and some people don't. I feel like the more that you
Yeah.
trade by yourself, the more you start to realize how boring it is. And you just want to surround
Yeah.
yourself around people that can relate to you and that understand what you're saying. So
Yep.
that's pretty cool. You've been able to build a community like that.
Yep.
Let's talk about some things that I know are on people's mind. What's your thoughts on prop firms?
Prop firms are phenomenal. I would say it just depends on which prop firm you go to. There's obviously trusted prop firms, and you have to be careful, because there's a lot of prop firms that are coming out, and some are too good to be true. I would just say just be careful and just go with the majors that have the most payouts. And by payouts, I mean if the prop firm has like payouts that are just like $2,000-3,000, then those are not really those prop firms that you should go for. You should go for the prop firms that obviously have those bigger $50,000, $60,000 payouts, this and that.
Okay. Have you ever used the prop firm yourself?
No, I actually just trade my own capital, but to my students, I recommend using prop firm.
Okay.
Yep.
There you go. What benefits and dangers do you see in the prop firm game? Like if somebody wants to trade their own capital, like fund $1,000 account versus put that 1,000 into a prop firm, how would you kind of, I wouldn't say advise somebody, but what would you do?
So there's a common misconception in the community that I see regarding prop firms is people see these $100,000 accounts as $100,000 actual account, which theoretically it isn't, because you got to think about it as it's just a $10,000 account because you only have 10% to lose on 90% of the top prop firms. So if you think about it as a $10,000 account, and I just advise my students to risk 0.5% per trade on prop firm accounts, not even the full 1%. So if you just risk 0.5% on $100,000, you're risking $500. So rather than, I know some people, they say risking 2% on prop firms. Now, the problem with that is you lose $2,000 on 100,000. You do, God forbid, you're on a losing streak. You lose 5 trades and your account is gone. So that's why, the risk parameters for prop firms should be a little different than the risk parameters for trading a live account. And I believe that it should be a lower risk because theoretically it's not a $100,000 account. It's basically a $10,000 account.
Okay. So when you're trading your own account, do you feel like it allows you to put on more risk? And do you feel like that's a good thing, or is that a double-edged sword?
So it does allow me to put on more risk. And what I find better is basically there are certain setups that I want to take with very, very high confluences that I can risk the 3% if I want to. Now, doing that on a prop firm is sometimes you have it's just like, oh, you lose that trade, then you do have 2% left, but God forbid, like slippage happens or something like that, then you'll lose 4%. And then you can't take the next trade. So I just feel like, trading with live capital gives me the freedom of, basically I can do what I want. Obviously, I am disciplined enough to, understand my account. And also like the withdrawals, like I can literally withdraw whenever I want. Like, I don't have to wait and stuff like that. And also I get to keep 100% of the profits. So,
yep. There you go.
And another gem that I kind of want to drop is two of my people that are trading prop firm accounts in obviously in the community. I usually tell them that after you get your first 2-3 payouts and you're saving that money, deposit that into a live account and just trade that capital. That way you get to maximize your profits. You get to have 100% of those profits if they're a significant amount.
Yeah, I'm always on the fence about that because a lot of people always ask me like, because there's a huge community of people that always advocate for that, which is your payouts you should use for a live account. Yeah. My question is always like, why would you put your money back at risk in the same market versus, like investing it, for example, letting that money kind of work over there and then just keep trading the funded account?
So the reason why I say that is because it's not usually one payout. It's usually after 3 or 4 payouts. I recommend that, and it's not usually all the money. It's just like one of the payouts from the 4 payouts, and you can use that in your live account. Because sometimes, man, the prop firm game has become very sketchy. What I would say, and it's just the fact that sometimes you just never know when a company will go down and something like that. But now if you you just can't rely on something. Now, if you do have another account, at least, even if it's 20K or 15K, that, okay, you have at least that, if your main challenge is to blow, because, people do blow funded accounts even after a couple months, it happens. And the thing is, blowing a funded account, then you have to start again with the challenge and verification. So then that whole 2-3 weeks, you're left with kind of not a stream of income. That's why I would say at least your 1 payout from your 4 payouts, put it in an account. So that way you still have an account to trade.
Very well said. You got to have a backup plan in case something happens to that stream. So you're trading GU, EU, GJ, maybe a little bit of gold. Did you want to show us your charts today?
Yes.
So share your screen, kind of show us what you're talking about.
Yep. Now, mainly this year, I've only been trading GJ and gold in 2023, but I can show you the chart.
Now, I've seen you trade before. You've been on the charity streams plenty.
Yes.
I've seen your strategy. I think it's super dope how you're able to keep like a 10 to 15 pip stop loss. and kind of trade the momentum. So I'm really excited for folks to kind of pay attention here. And if anybody's scalping, to know that there's a very methodical way that you guys should be looking at the charts and to kind of, hopefully make those adjustments.
Okay. So basically this is gold. So gold, obviously I trade with a flat 20 pip SL. As you guys can see, there's like 3 setups right here that I've taken. And basically this is from yesterday. I caught 140 pips. This one I actually held to a 1-to-7 risk to reward. And as you can see, like I try to move with the volume. So this was more so a New York session trade. And if you've seen in the past week, New York session has been giving volume at 10 a.m. So I kind of waited till the NYSE open. I had seen that market formed a support right here at this point. As you could see at 1907, we rejected that area. We're coming back up. We broke these highs, came back for a retest, and now, market is coming up. So what I believe is now after we break these highs right here, this was one of the confluence that, okay, I want to take a buy because we broke these highs right here. And we've had the proper retest of the 50 SMA. Also, if you guys are using fib, this is also fib retracement, and market is going to push up. So I saw that market broke these highs at 9:15. 9:30 came in. We had a little slight pullback because for the whole week, when NYSE open on gold, we have a slight pullback. So basically, I entered in on the position right here on the pullback. I had seen that, okay, so this is the 8 SMA right here on the 5-minute, and I had seen that we're going to reverse over here. Obviously, I did see some drawdown, and price, turned around and started moving in my direction. I would say, let me look at it from the 15-minute time frame. I'll show you another thing. So on the 15-minute, we had a bearish candle closure as well, but as you can see, the candle closed above the resistance. So I would consider this, kind of like a break and retest of this area right here. And then, so I entered the position with a 1% risk. I had I actually had 150 pip take profit on this trade. So it was right here. At 1931. Entered at 1916.066. I did a 20 pip stop loss because I had seen that now if we come below here, then we would have officially rejected this resistance. So I was gonna look for sells probably beneath 1912. So that was my other area for taking a trade. So usually what I do is when I look at the market, I look at two ways on the market, basically a dynamic bias. Like if a market will come to a certain point over here, then it'll be a buy. Now if the market is going to continue dropping over here, then we're going to hop on the sells. So I basically try to catch either move. I don't really marry myself to one bias because sometimes I know that higher time frames will be bullish, but then on the lower time frames we might get a retracement, even though if the daily is bullish or the 4 hours bullish.
Can you give a quick example of that, the dynamic game plan? So you have a multiple options and it's like an if then kind of thing, or how do you look at
it's
the
like an if
bias?
then kind of thing. And that if then I can explain it better on GBP JPY. So I'll finish explaining these 2 trades and then we'll go on to that. So on gold today, I actually took a 1-to-3 risk to reward trade. I don't know what take profit was right here, but 1-to-3 risk to reward trade on that. Same simple strategy. I had seen that, okay, 15-minute bullish engulfing. I kind of hopped in on that candle. We did get a slight retest, and then price mooned for a 1-to-3 risk reward. Obviously, it did come down. I ended up taking partials at 1-to-3, like I said earlier, and price came down and hit me break even. But it was kind of weird that it came back to the support and it went right back up. But it was Friday, so market was a little bit slow. So take a look at GBP JPY. So GBP JPY is where I mainly see the dynamic bias strategy. So for example, now if I'm looking at GJ on the 30-minute right here, as we see, we're continuing to be bullish, right? Now if I turn on my sessions indicator, basically London session is on green. So what I would do over here is now London session open was right here at 3 a.m. So what I had mapped up yesterday, I actually deleted it for some reason, was that if market broke beneath these lows over here, I would go for sells. And now if market goes and breaks above these minor highs, I would go for buys. Because of the fact that if we break this area, it would be a break of structure. because right now we formed a higher high, higher low, higher high, higher low. Now when we break this area, it's complete break of structure, and now we would be flipping to bearish. Obviously, on the 4 hour, the 4 hour would be bearish as well, and it would be taking out these lows and also underneath my SMA. So obviously that scenario didn't happen. The buy scenario happened. So on this one, I would have hopped into my trade at the break of these highs at right here is at like 798, 795. I would have hopped in here, and just this one I would have put a 15 pip stop loss because of the fact that the volume of the candles is pretty high, as you can see on GJ, that each candle is moving tons of pips. So in this market condition, I would be using a 15 pip stop loss. And as you can see, I used a 15 pip stop loss, and yeah, we were able to straightforwardly get a 1 to 5 risk reward trade just like that. So for the stop losses, the 10 to 15 pip stop losses, with the way the market is moving on GJ with high volume because of the Bank of Japan and the fundamentals that's going on, I'm using 15 pip stop losses right now because of the fact that each candle is so large, even on the 5 and the 15 minute, that sometimes you'll get tapped out on a liquidity grab. So that's why I'm using 15 pip stop losses. But usually on certain calm market conditions, I'm good with my 10 pip stop loss.
So how many times would you try taking a trade in that direction before you flip your bias or before you step away? Is it based on risk or is it based on technicals?
Kind of like both. So I try to risk 1 to 2% a trade. The first trade I'll risk 2%, and I'll give my bias 2 chances. So I'll risk 2% on the first trade, and then the second trade I'll most likely just risk 1%.
Okay. So kind of reducing your risk depending on
my risk, depending on the setup. Okay. But most of the time, that's what I stick to. Now, for example, if we had just came down and we closed like super bearish and it stopped me out, then obviously I'm not going to give the buys another chance. I'm going to start looking for my sell plan, which was over here.
So how much is your trading based on your own intuition and kind of like a candle by candle decision making versus like a step by step, very structured system?
Basically, like, I'm really firm on the entries. Basically, like, every place that I enter usually at whole numbers. So usually like the 795, like, 800 was like my area of entrance. And I always talk about also the 800 and the 200 level on GBP JPY, how those are key levels basically. And what happens there is once those levels get tapped, we either get a major rejection, or if we break that area, we're going to get a lot of volume in the direction. So the 200 and the 800 level are key on GJ. Basically, they're like the GJ psych levels that I like to call it.
Okay. So, I mean, it's very obvious that you've spent a lot of time with these pairs and you seem to have an intimate knowledge about these. Yes. Would you, I wouldn't say recommend, but like if you were to go back and you were in like the early years of your journey, which most people who are watching this are, would you recommend sticking down to a few pairs and mastering those? Or would you recommend kind of mastering a strategy and that you could apply on any pair that's moving?
So what I like to tell my students is, if you can master 1 to 2 pairs, I think you're going to be fine. And what I recommend to my London traders is obviously GJ and GBP USD, because those are the 2 pairs that move with the most volume in London. For my New York people, I usually recommend them Euro USD and USD CAD.
Do you limit the amount of pairs that you trade? So like if all the pairs are moving very liquid that week, do you like limit yourself, like I'm only going to take GU and GJ, or if there's a setup on every pair, you'll take all of them?
No, I actually don't take it on other pairs. So if my pair is in consolidation, what I'll do is I'll tone down the risk. I will take like, probably 1 setup for the day. And if it's clear as day that the pair is just ranging, then sometimes, it's just going to be like, okay, well, today is going to be a no trade day. I can sit out because I like taking quality setups. I don't have to trade every day.
For sure. So, I mean, so let's talk about something a little fun. Because I know everybody here's loving the trade talk, because I know a lot of you guys are scalping and you may not be seeing the results that you want in your scalping, but it's obvious from even like talking to Aman and the times that I've traded with him, he seems to know these pairs intimately well, and that's how he can get away with a 10 to 15 pip stop loss. Most people
Mhm.
that hear this are like, oh, I'm going to go try a 10 to 15 pip stop loss on GJ. You have to be very methodical and kind of, really master that pair. So that's kind of the biggest takeaway I've gotten so far. But Aman, you were the youngest supercar owner in Georgia, I feel like, at one point.
Yes.
And
Yes.
so can you describe kind of how it was having the first supercar and kind of where you're at now?
So I purchased my first supercar at the age of 20. It was a McLaren 570S. You guys probably have seen it. It was the satin blue one at the summit. And I bought that at the age of 20. It was crazy because I'll tell you a little backstory is I actually purchased that car full on cash because I could not get financing for it because of my age. And also I didn't have much auto loan history. And also, it was crazy. Like I went to the dealership to purchase a McLaren at the McLaren Atlanta dealership. And they were just like, oh, you're too young. Like they didn't really take me seriously, this and that. And they were just like, oh, you have to be 23 to test drive one of our cars, this and that. And at that point, I was just like, wow, like they're not even letting me drive this car. Like, I have the money for it. And then they was like, yeah, you can't test drive. You're gonna have to bring somebody, this and that, and they can drive it, but you won't be able to test drive it. So yeah, so I looked in the market for this car, this and that. I ended up finding this car out of state, and I purchased this car from Michigan. I actually bought this car without actually driving it. So it was actually pretty cool that, when the car came to my house and I was just like, wow, like this is a spaceship. Like I didn't even know how to put it in like drive. I was like, wow, like I don't even know how to use this. I was literally on YouTube watching like tutorials on like how to drive a McLaren because I bought it without driving it. And then like, I kind of learned how to drive it and stuff like that. And it's funny because the car came tuned with stage two, which is 760 horsepower. It had a racing exhaust on it. It was like fully decked out. So I was just like, yo, I've never owned a performance car. And now like, I'm going from like a sedan, like a Mercedes to basically a full on 760 horsepower beast. Like, it was just insane. And then there was a lot of people, I started posting it on social media, this and that. A lot of people in Atlanta, they reached out to me and I became part of this car club. I'm still part of the supercar club in Atlanta. And they were just like, whoa, how old are you? Like, how did you get this car? You're 20 years old. Like, everybody in there is like in their 40s, this and that. They're just like, oh, we're getting just our cars, this and that. Like at 45 years old, I just bought my first supercar, and there was, wow, like you're 20. It was insane, and everybody was like, you're literally the youngest supercar owner in Georgia. Like, I go to the dealership, I go back to the dealership over here, McLaren Atlanta, with my new McLaren, and I'd be like, yo, guys, I was serious. I actually purchased the car, and the salesmen are looking at me like, damn. And I was just like, yeah, I was serious.
You just watch their commission fly right out the window.
Yeah, and then it's funny. They was like, oh yeah, next time you ever want a car, you have my number. You can come in here. You can drive anything you want. This SVJ, this and that. I'm just like, hey man, it's funny. And
So,
then
hold
cool
on.
story.
Before that, did anybody around you even have a supercar, or were you the only person
Not
around
really.
you and your family that has a supercar?
So I'm the only person in my family that has a supercar, and I live in Atlanta, and it's not like the culture in Miami where you see a supercar at every traffic light. Over here, even driving the McLaren, people were like looking at it like, "Whoa, like this is like a Bugatti," like like it's the same thing. Like I remember driving the McLaren in Miami, and people were just like, "It was whatever." But over here, it was just like it was very crazy. Like driving it around in my city, this and that. I live out in the suburbs in Atlanta, so it was very crazy. People would always ask me what I do for a living, this and that. Like, it was crazy.
Do you tell them you're a producer? What do you tell them you do?
Multiple ones,
Yeah.
the favorite one is OnlyFans.
Um,
No, but then,
so
but then they added me on Instagram, and then obviously they would see that I'm a forex trader, this and that. Yeah.
oh, good stuff. So
Yeah.
what ended up happening to the car? I know there's a pretty interesting story there.
Yes. So I was actually at a car meet May of last year. So right after the summit, the car gets back, and the car takes like 3 days for it to come back from Miami. And I'm just like, okay, bet. And then there's this car meet. So the car comes off the truck, I go get it washed, and then the next day I head to the car meet. The car meet was called Gumball 3000. It's actually a very big rally around United States where they drive all the way from Toronto to Miami. So it's actually very crazy, and they stop at the major cities. So you'll see like every supercar on there. There's a lot of hypercars. So they start from Toronto all the way to Miami. There's people from overseas like Germany, London and stuff. They ship their cars out to the US for this rally. It's actually very big. So yeah, so we went to this rally, my car club that I'm part of, which is DDATL. We met and we were over there. We had our own little car show on the side as well. And obviously they were just like, oh, bring out the McLaren, you got it wrapped, you have some nice lights and this and that. So I bring it out, this and that. We're chilling at the car show. It was a blast. Everybody from the other event started coming in from the Gumball 3000, and it was fun, this and that. We leave around 6 p.m. I'm coming out of the car show, this and that. I literally take a left, and there's a SV that pulls up next to me. It was an Aventador SV, and basically it was somebody who had just purchased the car like literally 2 months ago. He didn't have proper control of the car, didn't really see the blind spot, this and that. So I'm just driving. He comes next to me, and he merges in basically after the traffic light, and literally like my car, he merged in with so much pressure into my car. My car literally like got off the road, like into the air. It literally went airborne onto the right side of the road. It was
Damn.
actually very crazy.
All right, so then what ended up, I mean, glad you're safe. So you good? Did you get any injuries from that or no?
No, I had like a cut in my finger, but I'm glad, God's good that nobody got injured in that accident. What happened was I actually hit my cousin's BMW i8 on the right. So it was a 3-car collision. It was literally $1 million crash because the SV was worth like 600K. My car was worth 170K, and my cousin's i8. And it goes viral. Like, it's on the local news on YouTube. There's so many people making videos on it. There's $1 million crash in Atlanta. What was crazy was when that crash happened on that street, there was so many people walking on the street. And there was a lot of people taking footage of the cars because it was a car show. And people were able to take multiple angles of the footage of the accident because they actually didn't expect us to crash. They were just like, oh, there's a McLaren and an Aventador just going down the road. And, obviously, that footage helped me to my advantage as well. After we showed the police knew exactly what happened. The driver with the SV was trying to flee after he crashed me. He called the tow truck and basically basically towed his car on and was literally trying to dip. He didn't even ask if I was okay, this and that. The police chased down the tow truck and they bring the car back to the scene. It was a whole situation. But glad I'm out of that. The McLaren ended up actually getting total loss. It actually wasn't even that much damage. It was literally like 25K worth of damage on the front, but insurance decided to total loss it. And yeah, it's whatever. I actually ended up making $20,000 after driving it 2 years as well because of the whole used car market hype as well.
Yeah, I mean, you said 170 grand. That's pretty cheap for a 570S.
Yeah, you know what's crazy is I actually only paid 140 for that car.
Holy shit!
Yeah, I had got a steal from a private seller who was desperate in Detroit. So he was in Detroit and he was just like, my city is dead. Nobody's willing to take this supercar for sale. And I have a deal locked in on a 765 LT. So I need to get rid of this car ASAP. So basically, not me being a cash buyer, I was just like, I'll come tomorrow to Detroit. I'll write you a check and we'll buy this car.
Dude, that is a steal. And so you made 20 grand after driving it all around, after having all these incredible experiences.
Yep.
Then you just got a new car. So can you tell us the story behind that one?
Yes. So after the accident, insurance takes forever, guys, especially with supercars, because the insurance agents that come, they actually don't know anything about supercars. So they're just like, well, they don't know what to do. So after 3.5 months, they declare it total loss. At first, they're just like, we're just going to repair it and we'll just give you diminishing value. But then they declare a total loss. Then I'm just like, oh, wow, car is gone. And, at that point, I was a bit sad. I was like, yo, this was one of my first, big purchases. Like, wow, the car is actually gone. And then, I ended up getting the check for the car, this and that. And then I was just like, now it's time to level up. It's time to, change things up. So I was like, I want a Lamborghini. And basically, I started looking for the Huracan Evo. And I ended up finding a nice Huracan Evo in California. And I ended up buying it a month ago. It's yellow and it's fully spec'd out, carbon fiber seats, everything. I paid about 300K for that car. And yeah, that's what I have right now.
Dude, first off, congratulations. Super dope car. And I know
Yep.
the
Yep.
Huracan Evo is a super smooth Lamborghini.
Yep.
Like compared to the other race cars, it
Yeah.
tends to drive a lot smoother. Well, how do
Yep.
you compare the two? Just real quick, curiosity.
So the McLarens are known to have electronic issues. So my McLaren being tuned would always run like, check engine lights, this and that, flashing check engine lights, engine warnings, this and that. Like I remember even being in Miami and driving to the summit, I get like a warning. It's like, oh, engine system fault, this and that. But at that point, I just kept driving because I have a supercar mechanic over here that I consult, and he was just like, McLarens are known to do that. You just keep driving. If there's a serious fault, it's gonna throw like red codes. If it's throwing like yellow codes, you're fine. So that I kind of learned like that a McLaren is a very sensitive car, and basically like what I would have to do is when I would unlock the car, I would have to unlock the car, let the car wake up for like one whole minute, then turn it on. So then, that was the little trick to it. And then after that, like, I didn't really get that many, check engine lights and stuff like that. But McLaren sometimes are problematic. They're hit or miss. The car did have more power than my current Evo because my Evo has 640 horsepower.
Mm.
So the other car had 760 horsepower, but the Evo, I actually haven't done anything to it. It's actually factory right now. I plan on twin turboing it through UGR, probably within the year or something like that, which will give it like 1,200 horsepower. I really want to do that. That's been a dream.
Oof, 1,200 is crazy.
Yes.
Let me ask you about the summit since you've mentioned it a few times. You
Yep.
made it out from all the way from Atlanta down to Miami. You came to the
Yep.
summit. You had a booth at the expo, which I think was super dope. Talk to us about your experience at the FX Summit. Like, what did you actually think?
So the FX Summit was phenomenal. I really think that you guys did a good effort in organizing it. I know it was your first event, and for being at your first event, you actually did a great job, you and your team. And I would say it was a lot of networking, to be honest, because I had known all these people from Instagram, this and that, all these Forex traders, this and that. I've known of two banks for years. I've known of Ryan and Druzy and everybody like FIP. I've known them for years off of Instagram. I've spoke to them here and there, but seeing them in person, networking, was pretty good. You get to hang out with them, like-minded individuals, and also my summit was also a way for me to do a meet and greet. So what I had announced to everybody on my mentorships and stuff, like, yo, this is going to be my first ever meet and greet. So if you guys want to meet me, come to the summit. I have my own booth. So then I had a lot of people, they came out, some people came out to support me, this and that. And yeah.
It's super dope, by the way. I think the meet and greet idea is a great chance. And especially next year, I want to see more people do that, which is like it's always great interacting with people digitally. But as soon as you get to have a face-to-face conversation, I think it changes the game completely. So super dope. Between the car show and the dinner and some of these other events, what was your favorite part of the weekend?
I think the expo itself was actually pretty nice. I think it was pretty dope how people can come up to you and they can ask you questions in person, this and that. I would say, there was a lot of people who came, they would ask me for advice regarding risk management, psychology, just a whole bunch of stuff, even life advice, like what do I invest in, this and that. And it gave people a chance to, interact with me face to face. So I really liked the whole expo itself.
So we're going to see you at FX Summit 23?
Of course, I'm locked in.
All right, good stuff.
I will be bringing my Lamborghini as well.
Aman, all right, beautiful. Look forward to seeing you there. So, ladies and gentlemen, this wraps up the interview. Aman, I appreciate you stopping by the show, brother.
Yep, really appreciate it. Thank you for the opportunity to come on here.
No doubt.